Hello and welcome. We are delighted to have you all join us today to talk about The Number, a recent report that World Coffee Research published on the investment gap in coffee innovation. I can see that a lot of folks are still logging on, but we have a lot to talk about today, so I'm going to get things started. My name is Alexa Heinecke, and I am the Senior Corporate Membership Manager at World Coffee Research. And today I am joined by Dr. Vern Long, Chief Executive Officer at World Coffee Research, and Dr. Mywish Maredia. Dr. Maredia is an economist and professor at Michigan State University in the United States. She has extensive research and consulting experience in agricultural R&D around many commodities. Notably, Dr. Maredia was part of a standing panel on impact assessment, which guided global development donors in their international ag R&D investments to achieve food security and poverty reduction goals. We are excited and honored to have Dr. Maredia with us today. So over the next hour, Dr. Maredia will first present about her latest research, followed by a conversation between her and Dr. Long. And then we'll aim to save the last 20 minutes for Q&A. So if you have questions, please type them into the chat box on the right of your screen. I also encourage you to read questions from other audience members as they're published and upvote the ones that you think are of particular interest, so that helps elevate them in our queue. A final note from me, I would like to especially thank the members of World Coffee Research. You number more than 170 around the globe, and you play an extremely important role in funding research like this, as well as helping to advance the industry's shared research agenda. We are deeply grateful to you. So with that, I will hand it over to Vern.
Thank you, Alexa, and welcome everyone. We're so excited to welcome our industry members, industry partners around the world, the research community, and government officials who are interested in this question as we move forward in achieving our sustainability goals as an industry. So we're here today to bring to you an analysis that has been on my mind for a number of years since I joined WCR. When I look at the global interest in coffee and our strategic interest as an industry to move towards a more sustainable supply around the world, what I noticed is that there seemed to be a pretty substantial gap in investment and innovation and the strategic sustainability goals that we all share. And so I was really excited when Dr. Maredia agreed to go on a journey with us to clarify what is this investment gap and what does this mean for our industry as we seek to achieve our sustainability goals, from government's perspectives at increasing export revenue from coffee exports, to farmers' interests in having a living income and sustainable production, and the industry's interest in diverse, stable supply. So I'd like to delay you no further and bring you to Dr. Maredia, who's going to share with us her wonderful insights and analysis that she has been embarking on over the last year. So without further ado, Dr. Mywish Maredia, welcome, and we look forward to learning more from you.
Thank you. Thank you so much, Vern, for that, and Alexa for that introduction and this invitation to share the results of our analysis with the broad audience. So before I start, I just wanted to acknowledge that the analysis I'm presenting today comes from the Maredia and Martinez. So I wanted to acknowledge my co-author, Jose Maria Martinez, as part of contributor to this. But I'll be the sole presenter. This is the overview of what I'm going to present. First, I'll give a brief background covering these subtopics on what the crisis is, why R&D, why this analysis, and then give an overview of the method we used to come up with the number, and then the findings and results and conclusion. So let me start with some facts that are good, bad, and ugly. The good news for the industry is that there is robust demand for coffee. Coffee is the most popular beverage, and the coffee culture is growing rapidly throughout the world. with consumption expanding both in exporting as well as importing countries. However, this good news comes with some bad news. For example, the benefits of this expansion are not shared equally throughout the value chain. Smallholder farmers get only few cents of each dollar spent by consumers. In fact, many farmers are not able to cover full cost and suffer economic losses due to low prices. This is threatening the economic well being of millions of smallholder farmers across many countries that are already battling the issues of poverty and food insecurity. Producers are currently not only getting the smallest share of the pie, but also expected to lose the most with climate change, which is projected to reduce land suitability for growing coffee, increase risk of diseases, and ultimately coffee productivity per unit of land. These impacts are a threat to coffee diversity, something for which there is a high consumer interest. Another bad news is that despite its global economic importance, the world is shockingly underinvesting in coffee R&D. The current global investment is estimated to be around $115 million per year, with 90% of this investment coming from public sector and 10% from the private sector. This equates to about 0.048 or less than half a cent for every dollar of green coffee produced globally. So the cumulative effects of this bad news are the trends of stagnant and declining productivity, the concentration of benefits in the hands of fewer and fewer farmers in fewer and fewer countries. And these trends are worrisome. And if they continue, they will lead to disappearance of many countries from the current list of coffee exporting countries. This is creating a high level of uncertainty for the sustainability of the coffee industry. Sorry, I went too fast. But many researchers and organizations have recognized these threats and made calls for action to respond to these challenges. For example, the 2019 report by Jeffrey Sachs et al. Made a strong case for a global coffee fund with an annual budget of $10 billion to support a suite of activities to ensure economic viability and sustainability of coffee production. In this study, however, we focus on the need for one specific type of investment, which is agricultural R&D for coffee. The scope of R&D we consider include support for innovations in coffee production through improvements in varieties, cultural management practices, farm operations, and marketing. They are inclusive of technical mitigation and adaptation options for climate change. So why this focus on making a case specifically for ag R&D for coffee? Well, there are three main reasons. One, innovation and technical change is the engine that drives total factor productivity, or TFP, which propels the sector forward. The long-term success of the industry requires innovations that respond to consumer priorities and preferences and are also aligned with farmer priorities that require new technologies to respond to the rapidly changing production environments due to climate change. Second, technology-induced productivity gains can play an important role in increasing incomes for smallholder farmers and can contribute to the goal of poverty reduction. This is especially an important reason for coffee because it is mostly produced by smallholder farmers in developing countries of Latin America, Africa, and Asia. Improvements in productivity associated with investments in R&D have been shown to have poverty reducing effects in other crops. It was the bedrock, for example, for the green revolution that happened in cereal crops. And a third reason for why make a case for ag R&D is to correct the global underinvestment in coffee. So one approach that can be found in the literature to use as a rule of thumb to allocate R&D resources across commodities is this parity model. According to the parity rule, R&D dollars should be allocated among commodities in proportion to their market value shares. In this graph, we show, how much for decades the coffee sector has experienced a disparity between its value contribution to total agricultural production, which is shown in these darker shaded bars, and its share in total R&D investments, which is shown here in the lower bars, which is the lighter shades. This gap between the two bars suggests gross underinvestment in coffee R&D compared to its value contribution to other agricultural commodities. So why the need for this analysis? Why not make the parity rule argument and simply double investments in coffee R&D? Well, that argument can still be made if there is a rational basis to determine the total size of the ag R&D investment pie. But some recent efforts made in that direction have focused mostly on aggregated crop categories, or often coffee is excluded from such analyses and models. So a simple reason for this analysis is to understand the true size of investments needed in coffee R&D, independent of the size of the total ag R&D investments. Such analysis can provide a rational basis for the number that hopefully the industry can see as their North Star and rally the troops towards. And that is the aim of this study. So how did we come up with this number? Our method consisted of estimating projected global demand and supply of coffee under a business as usual scenario of past trends continuing into the future, and alternative scenarios where we vary these projections based on assumptions of demand growth and the impact of climate change backed by literature research. Under each scenario, global supply lags demand, though the gap varies based on the projections. We then estimate total yield needed to bridge this gap and convert that into percentage annual growth over the next 10 years. This projected yield growth is then used as an exogenous shock in an economic model to assess the gap in ag R&D investments. We focus our analysis on 45 coffee producing countries and divide the world into 4 regions. The big 3 consisting of Brazil, Colombia, and Vietnam, the continent of Africa, Asia excluding Vietnam, and Latin America and Caribbean region excluding Brazil and Colombia. This chart below here shows the percentage share in global coffee production by these 4 regions. The big 3 together produce about 57 or 58% of global coffee, and the shares of other 3 regions are in the range of 12 to 17% each. So the bedrock of our economic model is the positive relationship between agricultural R&D and coffee productivity. This is fundamental, that there is that positive relationship. The model requires, in addition, several parameters which we had to estimate using data from multiple sources. This include data on area production yield that we got from FAO, the total factor productivity data, which we got from USDA, the R&D investment data that we procured from ASTI, and the coffee price data from the ICO. Finally, following the method used in other analyses, we combine these parameters to estimate the R&D investment needed to recover from exogenous shocks that we project to happening to the yields. So based on extensive literature review, we constructed these scenarios for demand, climate change, and the origin consolidation. or the supply consolidation. Under the demand scenarios, we constructed two scenarios of one, the business as usual of continuing demand growth at 2%, and then alternate demand scenario where we assume the demand growth would accelerate by about 0.5 percentage point more to 2.5% a year, based on trend projections by experts that take into account population growth of younger people, income growth, and cultural shift away from tea towards coffee. Similarly, based on the literature, we construct a business as usual climate change scenario of no change, and two alternate scenarios of the impact of rising temperatures and erratic rainfall on yield loss and land loss. In scenario 2, we assume that climate change trends will lead to yield loss of about 0.25% per year, but no loss in land area. And in scenario 3, we assume additionally the coffee sector losing about 0.46% per year. And sorry, there is a typo on this slide. Of land loss over the coming years. In addition to the demand and climate change projections, we estimate R&D investment needed to fill the supply gap under two circles, or under two scenarios of diversity of supply, which are represented in these two circles. The outer ring is the business as usual scenario and assumes an increasing share of coffee supplies coming from producing countries with higher productivity. Especially this include Brazil, Vietnam, and Colombia. And the implication of this being that there will be less diversity in types and flavors of coffee to meet consumer demand. The second scenario, represented by the inner ring, assumes the geographic diversity of coffee supplies will be maintained at the 2022 levels. This is the pie chart I showed a couple of slides earlier. So what are our results? Let's go to the next slide. So here are the numbers resulting from our analysis. In the report, we present, of course, the investment gap numbers for all combinations of those demand and climate change and supply concentration scenarios. But for simplicity here, and in the report that's on the website, we present three numbers, which we are calling the baseline, reality check, and the North Star. The minimum additional investments needed per year in coffee R&D over the next 10 years is $30 million in 2020 US dollar currency. Under the business as usual demand, no climate change, and higher supply concentration scenarios. These additional funds can all be invested in the big three region, which is our base, and this is what we call our baseline. But if we consider the realities of demand growth projections and the effect of climate change on land loss plus yield loss, then the bare minimum investment to sustain global supply is additional $246 million per year. This reality check still assumes continuing trend towards production concentrating in fewer countries, with the implication of loss in coffee diversity. If we value diversity and want to restrict this trend of increasing concentration from occurring and let the regional coffee production shares remain at the level of 2022, then the number goes up to $452 million US dollars per year. This is the North Star. The additional R&D investments needed to maintain a diverse, resilient global supply that sustains millions of smallholder farmers. Our analysis, what the different shaded bars within each of these scenarios suggest is that under both the reality check and these North Star scenarios, an increasing share of resources need to go towards Africa and Latin America, given the historical underinvestment that has led to declining total factor productivity growth rates in this region. These two regions thus have a higher productivity gap to fill and thus require more investments to have their coffee production system keep pace with the challenges of demand growth and climate change. And additionally, to keep their production shares closer to the current level. So the main takeaway of our analysis is that there is no free coffee. If the world wants its favorite beverage from diverse regions of the world, and it wants to sustain millions of livelihoods and healthy ecosystems, and it wants to contribute to the economic prosperity of coffee producers and the coffee global value chain actors, then the world must invest more. The size of the coffee R&D investment pie must grow bigger, and more than 80% of these resources should be directed to Latin America and Africa. So that's the main takeaway. And in conclusion, our analysis shows that current investment levels are nowhere close to the reality or the North Star. If we use the North Star as our guide to direct us to a destination of a coffee world that is diverse, resilient, and sustaining millions of smallholder farmers, then the current total investment needs to increase fourfold to 567 million. This may seem too high a price tag, but is it really? From the perspective of the coffee sector, this comes to a little over 2% of the annual value of green coffee. For an industry with a retail value of more than US $200 billion, this would mean setting aside less than 0.3 cents, and I'll repeat, less than 0.3 cents for every $1 of coffee retail to consumers. As an economist, I would say that given that demand for coffee is extremely inelastic, even if the cost of this needed R&D is passed on to consumers, and I'm not saying that it should be, but if that were to happen, it should not adversely affect demand for coffee. So I'm asking the coffee consumers in the audience today, who is willing to pay 1/3 of 1% more for their coffee? Thank you. And I'll hand it over to Vern for the next phase of this program.
Thank you so much, Dr. Maredia, for this incredibly insightful and thoughtful analysis as we wrestle with these questions in our industry of what it's going to take to really achieve the sustainable future for our beloved beverage, as you mentioned. So I wanted to start out with just a few questions, and we encourage the audience to add their questions and to vote on those in the Q&A tab so that we can bring those questions towards the end of the program to Dr. Maredia. So just to get us started, Dr. Maredia, you have done analysis of the investment gaps in other crops. You've looked at the impact of agricultural R&D investments in other crops over the years. And I'm curious, when you began looking at coffee, what was striking to you about it? And is there something unique about coffee's investment gaps versus other crops that you've looked at, or any observations having come into this project?
Yeah, thanks for that question, Vern. Yes, coffee was a new crop to me, and I think I've told you many before that I'm not a coffee drinker, so I'm sort of a partial analyst in this. I have no stake in what would have come out from our analysis, but going back to early days of my career, I had looked at the similar type of issue for wheat crop, so I have sort of this contrasting experience of looking at cereal crops, and most of my research career and work has focused on looking at food security crops in developing countries, where there is a lot of donor interest to invest, mostly because they sort of lead to increased food production, which is associated with food security. And the, my experience with looking at wheat R&D sector, and this is in a developing country context, the thing that, and then when I started looking at coffee, the thing that struck me as a bit different was that for cereal crops like wheat, there is a lot of investment that goes at the international level to create public goods, which are very beneficial to countries, even small countries, to get some materials in the pipeline that keeps them, focused on doing just minimum research to get the most benefit out of those research inputs they get or outputs they get from international research. I think that is totally absent in coffee, where countries are very protective of their research, and there is no equivalent of the CGIR, the Consultative Group on International Agriculture Research Centers, that works on coffee. And so when I started looking at coffee, that was sort of something that struck me as a very different type of investment scenario, and just the lack of spillover effects that I found in cereal crops versus not being absent in a crop like coffee. Maybe can I also ask a question to you, Vern?
Sure.
Sure. So, as an academic economist, very often the main audience of the work I do are other economists or professionals in my field. But with this research, the World Coffee Research has really intentionally wanted to, reach out to a wider and broader audience. So, can you talk more about who are you hoping to reach out with this research, and why you want to reach to them? Mm-hmm.
Thank you, Mywish. I think that the reason for this study is to really understand the magnitude and the trend, right? So how big is the problem of underinvestment in innovation? And when we think about quantifying it, it helps us understand who are the partners that we need to mobilize to do this investment, whether it can be solely handled by the private sector in the industry alone, or whether this is the kind of thing where partnerships with governments are really key to mobilizing the level of investment required. So understanding the magnitude of the challenge has really helped us see that this isn't just a small industry project that we would undertake, but rather it truly will be a partnership between the public and private sectors to mobilize the level of investment required. I think the other part is the point you just made about spillovers. So this idea that innovation from one country and the investments in R&D in one country can benefit other countries. Because coffee producing countries are fundamentally competitive, just like the member companies of WCR, we're all in a competitive space. Figuring out how to organize research collaborations and then mobilize the investment to achieve those goals really requires models that make sense in this competitive environment, recognizing we're all facing the challenges of climate change together. So I have to say, I really appreciate your having taken this on. I know you don't usually work on cash crops. You're not even a coffee drinker, but somehow I appreciate that you've taken the last year to tackle this question for us so we can really dive into how big is the problem. Now we understand the scale and scope, and we can then organize our community around it to achieve our sustainability goals. So I actually wanted to then jump off for another question for you is, thinking about, the relative importance of investing in research. I think, as I mentioned, our industry is very interested in achieving sustainability goals. And we know that research isn't the only kind of investment one needs to make. So, having worked on essentially the standing panel on impact assessment, like sitting at the top of the global donor community, thinking about what is the investment impact coming from R&D investments compared to other types of investments that are supportive, technical assistance to farmers, training and so forth. how do you see the importance of agricultural R&D and investing in R&D versus other types of investments? What kind of insights or guidance do you have for our community?
No, thanks for that question. So I think I also made this point in my presentation of, why, what's the importance of why we need to invest in agricultural R&D versus other. And to me, it's not the question of either or, correct? I mean, we need both. We need investments in ag R&D, but also need investments that will train farmers to take up those technologies and innovations that come out of R&D. We need financial innovation, institutional innovations, to make sure they have credit to be able to uptake those technologies. So yeah, to me, everything is complementary to each other. However, still, if we are going to put $1 into the development end of this pipeline, in terms of training, extension, agronomy, uh, you know, at some point the fountain has to be replenished with, things for this downstream players to take on and pass it on to farmers. And to me, keeping that fountain of knowledge active, and that pipeline full, is very important, and that can only come through research and in investing in developing new varieties, developing innovations that will help farmers cope with climate change. And sure, you can increase production by cutting down forest, but does that answer, solve the problem? I mean, it's not the solution, correct? And so to me, that's the reason why ag R&D investments are fundamental. They are the cornerstone to making sure we will have something on the shelf to take it on to the farmers. And many of these technologies we are talking takes time. They take years. There's a big research to development gap, or lag. And maybe that sort of reinforces the reason of why investment needs to happen today if we want to see the benefits to accrue in 10 years, 15 years.
Thanks. And I think that brings us to this question of, how do we then develop the models, and how do you get to a number? Because, we seek to invest in research to drive the innovation required for the sustainability of our sector. And, we look to you as an economist to employ an economic model, looking to the future, and having some guidance on the rational level of investment, and so forth. And so, like any model, yours requires that we make certain assumptions that we've talked a lot about in the industry, about demand growth and challenges to production areas and so forth. And so I just wanted to have a little more information about the assumptions that were a part of your model. You have a number of different scenarios that you use about how fast demand will rise and how big of an impact climate change may have on coffee productivity, coffee land area. And you considered a number of scenarios for each of those. So could you talk a bit more about which scenarios you considered and why you think some are more likely than others, as we try to understand and interpret your work?
Sure. Yeah. I mean, absolutely. This is both a science as well as an art. Art in the sense that we had to make some assumptions of what the future will look like, in order to plug those numbers in the model to let the model spit out a number. So we, first, our assumptions, we did literature review to come up with, okay, what are other experts, or experts who do this kind of analysis on projecting demand and climate change impact, what are they saying in terms of the effect and the growth. And ultimately, there is the one thing you will find, and when you do literature review, is there is no agreement among those analysts. And so you will find a range of such predictions and projections being made. And the way, the thing I had to make assumptions was, in most cases, I just sort of took sort of the median values of those projections, or see what seems more realistic. Because so the numbers we have used right now in our model, they are most often sort of the midpoint of the range we find in the literature. So it is possible that this number may be conservative, if we, from the perspective that we didn't take sort of the extreme projections of demand. We only said, okay, maybe more realistically the demand may grow additionally 0.5%, but there are projections that even project them to be higher. So that is something, as an analyst, I just made that assumption that 0.5%, 2.5% growth seems more realistic than 3%. Similarly, for climate change, there are projections on how rising temperatures and erratic rainfall would impact yield and area loss. And so we came up with two sub scenarios. One where we said, okay, maybe it only impacts area and not land. And the second, which reading again other experts analysis, I felt like no, area will be also impacted based on those analyses. So we added this another second scenario, or the third scenario under climate change, that it will increase at the production will be impacted both by a reduction in yield as well as the loss in land. So in terms of these different scenarios, to me the more realistic is, in terms of demand, not the business as usual, but the higher 2.5% growth. And then in terms of climate change, both the loss in or the reduced production or supply due to both the climate and due to both the yield loss as well as the land loss. So to me, those are sort of more likely scenarios, and that's why in my those main results, I only focused on those scenarios of assumption of climate change impacting both land and area, and demand growing at the rate of 2.5%.
And so building on that, when we think about what Vietnam has accomplished, over a 30-year period, Vietnam went from producing very little coffee to today's levels of production, which have been tremendously important to our industry globally. And so I was curious, when you think about that and what it took for that kind of success story to be realized, could that happen again? Could we see a new entrant onto the horizon of really driving new production levels and increasing supply? If increasing supply is so difficult in current countries, perhaps there's a viable alternative of looking to new countries as governments figure out where coffee sits in their national portfolios for export. I just thought if you could talk a bit more about that.
Yeah. I mean, of course, don't have a crystal ball, but such that could still happen. No, that there might be new entrants into the sector, just like Vietnam just came out of nowhere and became sort of one of the third largest coffee producer in the world. But building a dominant globally, repeating this example of Vietnam, where a country from scratch tries to make a massive investment, billions of dollars of investment, and takes to increase the coffee production, can take decades to realize. And this is not necessarily a safe wager for anybody either, correct? I know the future supply, in most countries, because of this unpredictability of the future, they are making less investment in coffee, not more. And it's also relatively straightforward to increase production through innovation by the current existing countries, like it has happened with other crops. And it's just a matter of making that investment by current countries, or things, or in countries where production is already occurring, rather than a scenario where new countries might take up this as their um, a crop that they want to specialize in. Maybe I can ask you another question, or take a turn to ask you a question, since this is a conversation.
Sure.
Okay. So, I come from an academic institution. The World Coffee Research is not an academic research organization. You are very practical and applied, as far as I can tell. So why did you commission this paper, which is a little bit of an academic in nature? It's not, for example, a new coffee variety, correct? So of all the possible outputs you could produce as an organization, why this one? I know you said briefly in your introduction some of the rationale of why you did it, but in your experience, is an academic study like this important for spurring action in the real world? Because I would like to, think that this research was going to have some real world impact.
Absolutely. And I think that, as a science organization focused on essentially delivering products and services, so very practically focused, very applied focused organization, in the end, what we invest in and what we look to achieve in our industry, it's a function of what is possible. And so this kind of analysis really helps. Like, I think even the fact that you use the term North Star in the investment allocation that would optimize supply of diverse origins, having that kind of a North Star helps us realize just how large the challenge is and what it's going to take to achieve the sustainability goals that we have as an industry. I think that science is in service of achieving or solving the problems we have and achieving opportunity we couldn't have imagined. And so this kind of study really helps us organize ourselves as an industry, prioritize the type of investment we have, and to have some rational basis for levels of investment. I think one of the big challenges facing our industry right now is that it isn't just research that's the gap. There are investment gaps across a wide number of issues that fundamentally smallholder farmers serve as the foundation of supply for our industry, and yet the innovation and support and resources available to them are quite limited in many producing countries. And so when we think about how to orient our investment to achieve the greatest impacts, both for farmer livelihoods and welfare, but also for stabilizing global supply, we just need to right size the investment levels and make sure that they make sense so that we don't over index on investments in one space, when there's so much need. And I think this kind of study brings, as you said, you're a neutral player. You're not a coffee drinker. You're a very objective observer of our situation, and really helped us see just what do we need to do on the innovation side that really would help drive the continued goal of diverse supply on a sustainable basis. And so, when I think about this kind of study, when we commission work like this, it's really about helping us define that North Star. What is it that we need to do? And then we as an organization will mobilize investment towards this objective, either through activities we undertake ourselves, or ultimately, really helping to broker that investment to other sources of research supply. So like Michigan State University or other universities that we partner with to achieve this kind of work, we see that our role is to mobilize the community to focus investment in the right way, like in the right size, not too much like the Goldilocks level, just the right amount to achieve our shared goals. So I think I'd like to bring back Alexa, who can help us sort of sift through the questions that have been coming through and afford an opportunity for our community to hear more from Dr. Maredia and her expertise. Over to you, Alexa.
Thank you, Vern. Thank you, Mywish. This has been excellent, and you've given us all a lot to digest. So to transition to some of the questions that we have in the queue, I'd like to ask the first one, and that is, what are some of the issues in coffee that create such a big gap in investment in R&D? And Vern, I think you're probably best poised to take this question first.
So I think it comes down to the fundamental issue is that our industry relies on smallholder farmers, often in under-resourced production environments, where whether they're growing coffee or growing beans or sweet potatoes, they're facing investment or in innovation gaps in a number of crops and and the production challenges that they face. And so in a lot of ways, this is just about where coffee is produced and how investments are organized in most producing countries, which for the most part are low-income investment areas, low-income countries that have many competing challenges on how to use their national budgets, investing in agriculture at large, and then also financing other sectors of the economy, the health systems, the education systems. And so agricultural R&D is just one of many types of priority investments that need to happen. And so it makes a lot of sense, actually, that we would find coffee being an underinvested crop relative to other types of investments in agriculture and ultimately in other types of investments at a national level.
Thank you, Vern. Another question is around this $452 million gap that has been identified. That's an extremely large number. I'm going to ask Vern if you can speak to this from a coffee perspective, and Mywish, perhaps if you can take it and look at other crops, like how long does it take for industry to close this gap? How much time do we even have?
I don't think I will be able to speak in terms of how long it will take from the industry. I think one may be better in speaking from the industry perspective. But I think the point I would make is, yes, this number is large. We are talking about a four-fold increase in the level of investment that are currently being made. Most of that investment currently being made are by public sector, correct, governments, and these are mostly producing countries, which are developing countries. They themselves have many competing demands on the government budgets to address the issues of poverty, malnutrition, food insecurity. So yes, I think bridging this large gap just from a public sector, and especially just from developing or producing countries perspective, would be a huge gap. If that was all we were relying on, I think it would be an unreachable goal. To me, what this number suggests is that we have to look beyond producing countries and the status quo in terms of who is funding research. How long will it take and who those players are? I think one may be better able to speak on that.
And I think that's exactly right. I think that producing country governments have made the investments in their national coffee institutes, in research communities. Some have universities that are active in coffee research at origin. And so when we think about, it's just a question of what we want to achieve as an industry. And I think that's why the scenarios were put forward in Dr. Maredia's work. We get to make a choice. Do we want coffee from diverse origins? Are there strategic reasons as an industry that we want to have continued supply from diverse origins? And that's a motivator for mobilizing and deepening industry investment to secure that long-term supply, which then ultimately contributes to export revenue for governments. So I think there's a win-win that's very clear for exporting countries and the industry, is we can identify those research priorities, ensure organizational capacity to implement, helping support national coffee institutes that already exist. Countries are investing in their national coffee institutes, but they just don't have the magnitude of resources required, especially given climate change. And I think that's one of the game changers that the entire agricultural R&D community is really thinking deeply about this. What does it mean to genuinely produce climate resilient production systems? What does that look like? And so I think these are big questions, but I don't think it's actually that difficult. I think it's a matter of priorities. Do we want to have diverse supply? And do we want to ensure the genuinely sustainable production of coffee for our industry from across many producing countries? And if so, I think the partnership is clear. And I think that when we have an investment gap as large as ours, it makes sense to engage with our consuming country governments to mobilize investment. And this is something that WCR has embarked on in close association with the national trade associations. Our membership is global, but we work very closely with specific trade associations in each country, the US, Canada, the UK. We've worked with the ECF, a number of trade associations at the national level to really start to chip away at this question of what's the right amount for development donors to invest alongside national producing countries and alongside the industry. So the point of this whole webinar is to get us starting to think about this. Who's going to invest and how do we want to structure those investments to ensure that we have long-term sustainability of supply and that the farmers who are the bedrock of our supply are taken care of?
Thank you. Mywish, I'm going to transition to some technical questions about the analysis. One of them is when you looked at and tallied the number that has been invested, that is currently invested as 115 million, did you look at investments in synthetic coffee at all? Was that included in your analysis?
So I don't think I can say specifically it included synthetic coffee or any type of, or what the type of research was. The data that comes from us doesn't disaggregate by types for type and commodity. So if it is already part of the public investments that goes into developing synthetic coffee, then it would be included in it. Or, just two sources of private sector investment figures that I got. Again, they were just aggregate numbers. I don't know if behind those numbers there are investments that goes into synthetic coffee, but I'm not able to say whether it includes or doesn't include, just because I don't have that kind of a breakdown from on the type of investments the governments are making or the private sector.
Okay. Thank you. We have another question around what is included in R&D solutions and other markets, and I'm going to reword it slightly. I hope I've understood it. And that is, did you model your analysis on analyses you've conducted of other commodities that have suffered from R&D underinvestment, or how did you come up with this approach?
So again, we don't look at specific types of agricultural R&D investments or investments that go into specific types of research, like breeding research versus crop management research, or soil fertility research, pest management research. The way our analysis is done is at the very aggregate level. What is the investment that is being made on coffee or has been made historically on coffee, and what has been the aggregate output or productivity of coffee sector, and looking at that relationship at that very aggregate macro level, and saying that, okay, maybe in some countries that relationship we see between investments in coffee and the production or productivity effects are mostly because of improved varieties, but in some it could have been mostly because of crop management practices. And in some we don't see any effect, perhaps because either it's a very minimal level of investment, not at the threshold to generate innovations that end up in farmers' fields. So our analysis at the very aggregate macro level of this, looking at this relationship in terms of very high level numbers of investments, high level numbers of production and yield, and the total factor productivity for the whole sector, rather than sort of, so it is more a forest view rather than a view at the tree level. It could include some types of investment more in some countries versus other.
Okay. Vern, can I toss that question over to you? Because we have someone else in the audience who specifically asked about which areas of R&D might be grossly underfunded relative to other areas. And just given your work over the last 4.5 years with World Coffee Research, do you have a gut sense of this that you could speak to?
Well, I think we could even just go to the rule of thumb of other science granting agencies that fund crop research. So even if you just look at where the productivity gains are achieved, the first dollar moving into agronomy and crop management, as Dr. Maredia said, just improving productivity through those means, just improving the way you space the trees, so the optimal spacing of the tree, use of ground covers. And I think the challenge for us is it's not just about productivity, but it's also about the environmental sustainability and the environmental consequences of the choices we make. So as we start to define the parameters that we want to solve for as a scientist, we think, okay, what are our constraints and what do we have to work within? And so I think there's definitely, with increasing regulatory obligations that coffee producing countries need to comply with to maintain market access to key markets, as well as our goals as an industry to achieve sustainability and communicating that to our customers. There are investments in agronomy and management that are going to need to be made to figure out the optimal methods for production to achieve the environmental sustainability goals, but also ensure that farmers are profitable and that the combination of crops used or the production approach, all of those parameters, bringing together economic research and social science research and agronomy research to optimize the production system for farmers to ensure that they're successful, but it's also a good deal for the environment and a good deal for supply. All of those things need to be optimized within each other. And that's, a classic agronomy research and management research, really with this climate lens as well, thinking about the resilience of the system and the long-term productivity. Again, we're in a tree crop that's going to stay in the ground for 20 or 30 years. We're thinking about not just this year's harvest, but how do we optimize yields over the long term of that tree's lifespan and the production system it's in. So rules of thumb, when we look at the productivity gains from breeding versus agronomy, both are really key types of investments that every other commodity is made, and a 50-50 allocation has been historically what we've seen in other commodities. So by investing in breeding and investing in cultural practices and management, and then really having that climate lens, really thinking very thoughtfully about what do we want this production system to achieve. Those are the buckets of investment that are going to need to be made, but it's always thinking about the business case for the farmer. Is this a good deal for the farmer? Is this a good deal for the environment? Is this achieving all of the different goals we have for what coffee production looks like and what coffee production can achieve, both for the communities that are living in coffee producing areas? They want to have a robust environment that they live in, as well as our industry wants to have coffee that's grown sustainably. That requires innovation, and the investments really can follow what other commodities have done, and we can look to other commodities to see what their path has been and their relative allocation of resources to achieve these goals. We're not alone. We're actually among many, many, many commodities who have thought this through as well, at a global and a national level. And so I think that's the next step for us, is working at a national level and regional level to define those priorities. As Dr. Maredia mentioned, more than 80% of the investment, would be strategically anchored in Latin America and Africa. So what are the specific research needs that we have in those particular regions and countries that are aligned with the priorities of the national government, aligned with the farming community, what they want to achieve, what they want coffee to look like as part of their business portfolio, and then ultimately what the industry needs to achieve as well, both to achieve our customers' interests as well as the regulatory environment in which we're now operating.
Those are some fabulous summary comments, Vern, and we've reached the top of the hour. Do you want to wrap us up and then we can release everyone?
Wonderful. Thank you so much, Alexa. And thank you so much, Dr. Maredia, for your year-long quest into our challenge as an industry, really helping us understand what we need to do and where this investment gap is. Thanks to everyone who's joined us today. This recording will be made available on our website very soon. And we look forward to the conversations in the months and years ahead to figure out how we need to make steps to close this gap. Thank you so much.
Thank you.